So that's I stop that. I want us to start afresh under short-term decisions. Okay, then. So what do you understand by short-term decisions? Simply put, short-term decision represents the uses of marginal costing technique. Okay, the uses of marginal costing technique and the relevant costing principle to analyze a particular course of action in making managerial decisions. I repeat, short-term decisions represents the use of marginal costing technique and the principle of relevant costing to analyze a course of action in making managerial decision. For this purpose, you can say that marginal costing technique is a concept that is designed principally to compare the benefit arising from a course of action with its associated relevant cost in making managerial decision. I repeat, for this purpose, relevant costing is a concept that is designed principally to compare the benefit arising from a course of action with its associated relevant cost in making managerial decision. Relevant marginal costing is also known as cost-benefit analysis because management may desire to know whether the benefit will outweigh the cost. When you talk about cost-benefit analysis, management wants to know whether the benefit will outweigh the cost. Not only that, marginal costing technique is also a behavioral classification of cost because a cost item must be capable of being classified as either variable or fixed. I repeat, marginal costing represents a behavioral classification of cost. That is, a cost item must be capable of being classified as either variable or fixed. Therefore, relevant costing principle will be required in conjunction with the marginal costing technique to analyze the economic consideration of the decision that is to be taken. Okay, so under short-term decision, you need the technique of marginal costing and the principle of relevant costing to analyze a course of action in making managerial decision, whether it will enable the company to maximize contribution or increase profitability. So these are the things we are going to be discussing. These are just introduction. So generally, when you talk about decision making, you can state that decision making involves the process of selecting a course of action from different alternatives. When you have several options, so the process of making a choice out of several alternatives is what is called decision making. However, under short-term decisions, every decision or every alternatives must be examined critically in two different perspectives. I repeat, under short-term decisions, every available alternatives must be examined critically under two different perspectives, including one, qualitative perspective, 2 quantitative perspectives. So we're going to take it one after the other. But I need to lay emphasis on what you need to do as far as short-term decision is concerned. All the decision scenarios, all the alternatives you have under short-term decisions must be critically examined under 2 different angles. I repeat, you are going to look at the economic consideration of the decision that is to be taken. You also need to take into consideration the qualitative factors. Okay, under each of them, you have to do that even on the day of your exam, because economic analysis is not sufficient. You also need to consider the non-monetary angle of the decision that is to be taken before the final decision is taken. So let's take it one after the other. What do you mean by quantitative angle? What do you mean by qualitative angle? So let's take it one after the other. When you talk about quantitative analysis or quantitative angle or perspective, it simply means the monetary, economic, and or quantifiable angle of the decision that is to be taken. Okay? It represents the process of determining the economic and financial viability of the course of action, whether it will result in a contribution, profit or loss, saving or deficit to the organization. I repeat, the qualitative angle of the decision that is to be taken represent the process of determining the economic and financial viability of the course of action, whether it will result in a contribution, profit or loss, saving or deficit to the organization. These are the things you need to do. When you are carrying out the calculation, that calculation is called the economic, the monetary, the quantitative or quantifiable aspect of the decision. Okay, your calculation is the economic angle of the decision that is to be taken. So the second one, which is qualitative factors or perspectives. Of course, when you talk about qualitatives, it's also known as non-monetary, okay, non-monetary, non-quantitative, or non-quantifiable factors associated with a decision that is to be taken. It represents all those factors that cannot be expressed in monetary terms. Okay? Any factors that cannot be expressed in monetary terms is what is known as qualitative factors. So when you are analyzing an alternative course of action, you need to critically examine them using the by taking into consideration the 2 perspectives, the economic perspective and the qualitative factors. Very important, because at times the economic angle of it, even though if the project is viable, that doesn't mean that management may likely follow the recommendation. There may be need. In fact, at times some qualitative factors may be more important than the economic angle of the decision that is to be taken. All right, especially when it has to do with if that factor is critical to the decision that is to be made. Okay, so that's that. However, when it comes to decision making, you as a management accountant, you have a role to play. Okay, you have a role to play. Even though if you as a management accountant, you are part of the decision maker, always allow others to make the final decision. You are part of the process. You have been involved in the calculation, in the analysis, in the recommendation and all of that. When it comes to decision making, please Allow others to make the final decision. This is because if wrong decision is made, you may be held liable for that, and then it may have a dire consequence. As a result, always allow other decision maker to make the final decision, because the quality of the decision making by an organization will have far-reaching effects on the business success in the marketplace. I repeat, the quality of the decision making by an organization will have far-reaching effects, multiplier effects on the company's business success in the marketplace. Because bad decision can result in financial losses. It can also impair the ability of the company to take advantage of market condition. Bad decision can impair the ability of a company to take advantage of market condition. Not only that, it can also damage or erode the reputation of an organization. And that is why you have to guide your image very jealously. If you have done your analysis, make recommendation, allow other decision makers to make the final decision. Because if anything goes wrong, you'll be held liable for it. So as a management accountant, just do your analysis, be professional, do your recommendation, suggest to the management, advise the management appropriately, okay? And then allow the final decision maker to close the deal. Now, the reason why you have to allow, whenever there is decision that is to be made, you have to inform the top level management. As a management accountant, you have to bring that final decision that is to be made, or what the issues are. You have to inform the management, because it is essential that any critical business decision should be immediately brought to the attention of the management. It is necessary, okay? It is necessary to receive guidance from the management. If there's any issue in the future, you are going to, you free yourself by saying that, well, when it happened, the decision maker was involved, or were involved, and they were also aware. So it's not that you unilaterally take that decision. And that's why it is important to seek guidance. Anything that is not clear to you in your day-to-day activity as a management accountant, you have to seek for guidance. If the solution is not within your immediate work environment, you can talk to your professional colleague and seek their advice as well. There is no harm in doing that. Okay? So that is that. Now, the next thing we are going to discuss is the areas of application of marginal costing technique. Areas of application of marginal costing technique. Remember, I told you in our first day lecture, when I was explaining marginal costing technique, I told you that marginal costing technique is a technique designed principally to aid managerial decision. So, what are the areas that you can use marginal costing technique in decision making? So, marginal costing technique can be used to aid managerial decisions in the following areas, including number 1, discontinuance of a segment. 2, make or buy decisions. 3, shutdown of capacity. 4, adding of a new product or segment. 5, acceptance or rejection of a special order. 6, pricing decision. 7, linear programming. 8, optimal product mix decision. 9, cost, volume, profit analysis. Cost, volume, profit analysis. These are some of the areas in which you can apply marginal costing technique in making managerial decision. So our focus will be on just 3 of them. Most of them are topic on their own, which we are still going to do as we proceed in the diet. So we are going to talk about we focus under this particular topic, we focus on deleting of a segment. We're also going to do make or buy decision. Then lastly, we are going to discuss acceptance or rejection of a special order. So let's take it one after the other. What do you mean by deleting of a segment? What do you do when there's a decision to drop a particular segment? What should be your advice? And then what are the qualitative factors you need to take into consideration? All of this is what we want to do, okay? So let's discuss deleting of a segment in details. Then I will provide you with the formats, what should be your recommendation, as well as the qualitative factors. Then if you still have time, we can have illustration tonight. Okay, so let's take it one by one. So what do you mean by deleting of a segment? What is deleting of a segment? Yep. What do you mean by deleting of a segment? Let me just explain because of time. You see, let me use, say for example, I want you to drive it home. Say for example, a company has products, a company has this product range, product A, product B, then product C. Say the operating performance of the company. When you say operating performance, it simply means profits or loss. Okay? Now, say for example, the company make profit of 5 million naira on product A. The company incur loss of 2 million naira on product B. Then the company made profit of 3 million naira on product C. So because product B is generating loss, the company may be contemplating on discontinue producing our product B. So generally, when you are given a question, an examiner is asking you whether they should drop or they should discontinue or delete that particular segment. One thing should cross your mind, that the only reason that would make company to be or management to be thinking of closing down a particular segment is because that segment is operating at a loss. In some instances, examiner may not give to you the income statement that will show profit or loss. You may be the one that will prepare the income statement, and that's what I'm saying this. So let's go ahead and explain what deleting of a segment is all about in details. So when it comes to deleting of a segment, when a particular segment, including a type of customer, a product, channel of distribution, or geographical location is operating at a loss. When you say a segment can be type of customer. It could be a geographical location, it could be a product, it could be a channel of distribution. So when a segment is operating at a loss, so when a segment is operating at a loss, management may be thinking of closing down the segments. Management may be thinking of closing down or not closing, may be thinking of closing down the segments. So because no organization will like to incur loss. But because of the fact that that particular segment is operating at a loss, management will now be contemplating on closing down or discontinue the segment. So, but like I mentioned when I was demonstrating a few minutes ago, that the only reason that we make management to be contemplating on deleting a particular segment is because the segment is operating at a loss. So the reason why I'm emphasizing on this is that on the day of your exam, you may not be given an income statement that will show profit or loss on that segment. So once you see from the requirement, the examiner is asking you that you should advise whether they should close down or they should drop the sale of, or they should delete a particular segment, you should know that it is this is a deleting of a segment. And the only reason that is making the company to contemplate that is because the segment is operating at a loss. So it is therefore important to analyze the segments, considering both the quantitative as well as the qualitative factors before the final decision is taken. Remember what I told you, whatever you want to do under short-term decisions must be looked into or must be examined critically, considering the two perspectives, the economic perspective and the qualitative factor. Okay, now what are the quantitative factors or qualitative perspective of the decision that is to be taken under deleting of a segment? When you talk about qualitative factor, the quantitative factor, it's simply the process of comparing the cash flows of the affected segments with the associated relevant costs, whether it will result in a positive contribution, whether it will result in a positive or negative contribution to the organization, using the marginal costing, using the contribution margin approach, or what is known as an income statement. So when it comes to under deleting of a segment, the most important thing you need to do is to compare the revenue of the affected segment with the associated relevant cost, whether it will result in positive or negative contribution to the organization using the income statement. Okay, so that's what you need to do. However, it should be noted that when you are carrying out the economic analysis, only the affected segment should be considered. Okay, only that segment that is operating at a loss is what you are going to focus your attention. You are less concerned with other ones. It is only the segment that is operating at a loss that you need to take into consideration. Okay, so that's what you need to do under economic analysis. Now, what are the formats? What's the formats you need to take into consideration? So I don't need to rewrite it again since you have it in this material. So you can call it either contribution. When you want to prepare the contribution for each of the for the affected segments, you can either call it contribution margin approach, contribution margin statement, or income statement. Okay, so the first thing you are going to consider is to compare the sales value. You go and work out the sales value from the affected segments. You put it there. Then you now determine the relevant cost of making the segments. What is the direct material, direct labor, direct expenses, variable production overhead, opportunity cost. If there's going to be any selling expenses, okay, if there's going to be any selling expenses, provided it's a relevant cost. So you need to consider that. Again, you need to consider any directs, attributable, specific, or incremental fixed costs that you have in the question for the segment. So you add up all the relevant costs, less the relevant costs from the sales. Whatever you have could be positive or negative contribution. Okay, could be positive or negative contribution. Now, after you have carried out your financial analysis, that is your economic analysis, you may need to advise. You need to advise on your results because management does not know what positive or negative contribution is all about. This is where you have to demonstrate your expertise and to recommend to the management on what they need to do. So the decision rule, the first decision rule is that if you have positive contribution, if your economic analysis gives a positive contribution, please your advice should be that they should not delete the segments, because the segment is contributing positively towards the recovery of the company general fixed overhead and net profits. Okay? Remember, immediately after contribution, you need to less your period cost, your fixed cost. Therefore, provided your contribution is positive, your advice should be that the company should not delete the segment, because the segment is contributing positively towards the recovery of the company's general fixed overhead and then net profit. Decision rule number 2. If your calculation shows a negative contribution, your advice should be that the company should delete the segments. The segment should be deleted. This will then increase the overall net profit of the organization, because a negative contribution will depress the net profits. So if a negative contribution is generated, so it's better to discontinue that particular segment in order to enhance the operating performance, that is the net profit of the organization. So under negative contribution, please, you delete the segment. That should be your advice. Then number 3, where there is zero contribution will occur when sales revenue equal to total relevant cost. Okay, where you have zero contribution, then the company can either delete or not delete the segment depending on other qualitative factors. Okay, depending on other qualitative factors. So I repeat, where there is zero contribution, the company can either delete or not delete the segment depending on other non-monetary or qualitative factors. So what are the qualitative factors you need to take into consideration under deleting of a segment? So let's take it one after the other. And this is very vital. On the day of your exam, when you have questions, at times the examiner can ask you to state your qualitative factors. And then that's why I usually advise students, it is not sufficient for you to do only calculation. Any theoretical aspect of the question I think will enhance your score or your mark, you have to give it out. You have to let the examiner know how you have arrived at your numbers. However, whether you are asking a question, you have to state the qualitative factor under short-term decision. And when you are on the day of your exam, when you are stating the qualitative factor, please don't make it generic. A student can just memorize all of this. You cram all of this, and then as you are going to the exam and just be saying, the following are some of the qualitative factors to be considered. Number 1, the effect of the closure decision on the company's image, blah, blah, blah. Number 2, the perspective of the company's shareholders on the closure decision, blah, blah, blah. So when you are doing this, you are not linking it to the question. You have to link it to the question. Don't make it generic, because if you are doing that, others may be doing the same thing. So nothing is unique. So you have to link it to the question. The scenario that the examiner has painted for you in the question, you link your qualitative factor with it. Okay, don't make it so generic. You can say, for example, we have Amount, one of you is Amount in this class. So you can say Amount PLC should consider the impact of the closure decision on the company's reputation. Okay, so you have just linking with the question. Okay, don't make it too generic. So let's talk about the qualitative factors to be considered. Okay. When you are stating your qualitative factor, like I said, you have to link it to the question, link into the question. Don't make it too open, too generic. Okay. Make it let it be unique to the question. So let's mention some few qualitative factors you need to take into consideration as it has to do with deleting of a segment. Number 1, the impact of the closure decision on the overall turnover of the organization should be considered, particularly where the targeted segments is jointly demanded with other companies' products. Okay, let me explain that again. You know, when you want to delete a particular segment or a product, for example, you need to consider the impact of that closure decision on the company's turnover. Turnover is the same thing as revenue. For example, if the product is a joint product or product is jointly demanded, say for example, you have product A, you also have product B, and these products are jointly used together. Without A, B will be useless. Without B, A will be useless. That is what we call joint demand. So for example, you have marker and a pen. Sorry, we have marker and board. So board is useless without marker. Marker is also useless without a board. Okay. So you have book. You have exercise book. You also have you have pen. What are you going to write on if you don't have the book? The exercise book is also useless without the pen. So when you talk about joint demand, something that must be used together. So if, for example, in my example here, product A and B are jointly demanded. So if the company discontinue producing product B, it will affect the sales of product A because the customer will need them together. So as a customer, once you are not producing the second one again, I would rather go to your competitor that has the two of them. Okay. So because I can't buy one from you and go and buy one elsewhere, I have to buy the two together. So that means the sale of product A automatically will also fall. So the company must consider the impact of the closure decision on the company's turnover or revenue. Okay, that's one assumption. Sorry, that's one qualitative factor you need to take into consideration before final decision is taken. Number two, the effect of the closure decision on the company's reputation should also be taken into consideration because if I'm your customer, I usually buy from you. And then on this fateful day, when I get to your office or to your warehouse, I was told that you are no more producing. I will not be happy. Okay, I will not be happy. And it will not end with me. I also have to inform my other colleagues. I will inform my neighbors. I will inform my friends that you are no more selling that particular product again. And then that may likely affect the image of the company. Okay, depending on the severity of the situation. Then number three, you also need to consider the perspective and reaction of the company's shareholders on the closure decision. How would the shareholders take the closure decision? How would they react? What kind of perspective are they considering as far as the closure decision is concerned? Okay, so you need to take into consideration the perspective and reaction of the company shareholders in relation to the closure decision. It may well be that it's one of the shareholders that even introduced the product that you want to discontinue. So what that simply means is that as a shareholder, you are jettisoning, the management of the company is jettisoning the idea of the shareholder. And that may not sound well with that shareholder that introduced the product. It can even create a bad blood within the organization. It can resort to organizational politics because if you don't value my idea, it's like you don't like what I'm saying. So we begin to play the game. Okay, I want to show you that I'm a strong person within the organization. So organization politics can set in, and as a result, it will affect the performance of the company or the overall performance of the company. So when a company wants to introduce a change, before this product is being deleted or being discontinued, there will be need to inform all relevant stakeholders, including the customers, including the creditors, people that have borrowed the company's money. Okay, so the shareholders must be aware, carry everybody along so that they don't refuse the change. Okay, because when you are trying to introduce a change, there may be resistance as a result of that. So in order to ensure that everybody is on the same boat, so you need to carry them along, all right, before the final decision is taken. But if you think maybe you are the MD of the company, you have the finance, you just go ahead without carrying other stakeholders along. That may affect the performance of the business. All right. So next, you also need to consider the perspective and reaction of the company's creditors. Okay, you also need to will be taken into consideration. People that have borrowed you money as a company, the creditors that have advanced money to the company, so they are going to react to that closure decision. They will interpret it anyhow they like, and then so that's why it is important. The company should preempt what are the likely things that our creditors will do or will say as a result of this closure decision. So it's important to take that into consideration. I think I've mentioned about 3 or 4. So let me add one more. Okay. Now, the company will need to consider the impact of the closure decision on workers' morale, especially as it relates to productivity. Okay. Certainly, workers' morale will decline as a result of the closure decision, because we are human beings. Workers are human beings as well. Okay, the workers are human beings. So when it comes to workers' morale, what we are trying to say is that you have product A, B, and C that this company is producing. The company has product range, product A, B, and C that is producing. Because product B is not doing well in the market, you now decide to delete, you discontinue producing product B. Of course, you still have product A and C. There are workers that are operating on each of the 3 products. So if you now discontinue product B, that means you are technically saying that the workers on product B should go. That means their services are no longer needed, since you are now producing only product A and C. So the workers operating at product A and C will be worried that today these our colleagues that they have to go. Tomorrow may be our own turn too. So they have to put human face to whatever they are doing. So that will affect their morale. If morale is affected negatively, certainly it will lower productivity. If you are supposed to perform 100% on that day, you will not be happy because they have some of your colleagues to go home. So that will reduce productivity as a result of that. So the company will need to consider the impact of closure decision on workers' morale, especially as it concerns our level of productivity. Let me add one more. If you decide to delete that particular segment or product, you need to ask yourself whether the resources, including the employees, the workers, equipment that you are using for that particular segment that you want to discontinue, can be used elsewhere. Okay, can be used elsewhere where you can produce a more profitable, that can be put to a more profitable use. Okay, so if you decide to discontinue a particular segment, the resources that you have there, the workers, the equipment, and whatever resources that you have here can be put to a more profitable use elsewhere. Okay, so you need to take that into consideration as well. Not only that, how would the company manage all the negativities that may arise from the closure decision? Negativity including litigation, okay, or some compensation may need to be paid to the affected workers. So I could remember some years back, about 7 or 8 years ago, there was a particular company I know very well. It's a multinational company that has issues. The company has issue with a segment of its staff, because the company has different level of staff. We have regular staff, we have non-regular staff, we have contract staff, we have service contrast, different kinds of staff. So one of them was some of those, staff were employed in the 90s. And then problem started in around 2013 or thereabouts, when the company said they don't want them, but they are contractor, they are not regular. And those people said they are regular to the company because the ID card they were given, they were issued for them as at that time in the 90s is showing that they are employee of the company, but the company disagree with them. The issue was taken to courts. That's litigation. When there's litigation, the company's image is also involved. In fact, when these people were rioting, as at that time, in that 2017 or thereabouts, they locked down the offices of the company, including in the feed, in the south, where you have oil production, like in Port Harcourt, the one in Akwa Ibom and all of that. They were shut down. Even in the office, the head office in VI Lagos, they could not operate as a result of that. This set of workers, they barricaded the company's offices such that no one could enter the offices. Offices that the headquarters in Lagos were housed about almost 1,000 workers, staff within the building. And the building was locked down for an extended period of over a month. I could remember during that period, some of the workers are being ferried from from Ikoyi to VI through the lagoon. That's another risk. So this is the kind of negativity a company will need to guide against, because how would you manage the negativity that may arise from the closure decision? The workers' union may put up a fight against the company. In fact, this particular case I was saying, it was Femi Falana. It was Femi Falana that stood for the workers. Okay, and they won the case. But again, if you want to discontinue the segments, there may be need for the company to pay compensation for the workers, for the affected workers. So the company will need to estimate, do they have the financial capacity to pay the compensation? If not, so what do you do? Are you going to borrow money to pay them? All of this, you need to take it into consideration before the final decision is taken. Another factor is that instead of outright retrenchment of the affected workers, is it possible to redeploy them? Or would there be any staff training or retraining costs that the company will incur as a result of doing that? Because, like I mentioned the other time, you have product A and B, product A, B, C. Now that you want to discontinue producing product B, so you have product A and C. So the workers that are currently operating on product B, so do you need to redeploy them? If you are going to redeploy them, at what cost? Is that going to be, because you need to train them for them to be able to handle either product A or product C. So does the company has the capacity to pay that money? All of this you need to take into consideration before final decision is taken. So these are all the stories or discussions around deleting of a segment. So at this point, let's have illustration to demonstrate all our discussions. So before we have illustration for the few minutes that we have outstanding, let me know if you have any question for me. Let me know if you have any question for me. If not, we can just have a small illustration to demonstrate our discussion so far. Okay then. So let's scroll down. Let's have this illustration. Hopefully we'll be able to complete it within the next 15 minutes. Okay. So who will read for us?
Adigoluja manufactures three brands of ice cream, chocolate, vanilla, and strawberry. The present net annual income from this is all information as incorrect. The company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. It is felt that selling prices cannot be raised or reduced without adversely affecting income. 5,000 naira of the fixed cost of vanilla are direct fixed costs, which would be saved if production ceased. All other fixed costs would remain the same. Required: A. Should the company drop the sales of vanilla? B. Suppose, however, it is possible to use the resources realized by stopping production of vanilla and switch to producing a new ice cream, banana, which would sell, or 50,000 naira.
Which we sell for 50,000 naira.
Okay, sir.
Okay. Go ahead.
Sir, please scroll down.
Okay.
And incur variable costs of 30,000 naira and extra direct fixed costs of 6,000 naira. Will your earlier decision in A above remain the same? C. What are the non-quantifiable factors that the management of Adigboluja should consider?
Thank you very much, Tife. Yes, that is the question. That's the question. See, examiner is asking you, should the company drop the sales of vanilla? So something should cross your mind from this requirement. Examiner is asking you, should the company drop the sales of vanilla? You should know that this represents deleting of a segment. So if it's a deleting of a segment, what are you supposed to do? Very clear. Just go ahead and determine contribution of the affected segment by comparing the sales value versus the relevant cost of producing a vanilla. Remember my previous explanation. Your focus should be on the affected segments, which is in this case, vanilla. You are less concerned with the profitable segment with chocolate or strawberry. Your focus is on vanilla that is operating at a loss of 3,000. So if that is the case, using the formats, the first thing first is to pick this without wasting time. Let me stop sharing this so that we can maximize the little time that we have. Let's go to the working notes. Okay. This one too. Let me change it to deleting of a segment. Or short-term decision class 1. Okay, just leave it like that. Okay, then the name of this company is Adigboluja. Let me go back to the requirement number A. Adigboluja. Requirement number A is asking us, should the company drop the sale of vanilla? I would then say income statement or contribution margin.
Sir, we can't see your screen. I can't see your screen.
Oh, I'm not sharing. Sorry about that. I thought I'm sharing. Thank you for speaking up. You can see it now, right?
Yes, sir.
Okay, then. So I would then say income statement. I can call it income statement, or I say contribution margin statement or contribution margin approach. However I want to call it, whatever name I call it, that is the same thing. Examiner can call it budget statements, income statements, contribution margin statements is the same thing. Okay. So I will then go to the question. I will go and pick my sales value. Sales value for vanilla is 40,000. So income statement for vanilla. So sales 40,000 naira. So I need to compare this sales with relevant cost of making vanilla. relevant cost of making. So I will then go back to the question. We are given variable cost of 25,000 naira. Variable cost is relevant. So I will come here variable cost. 25,000 naira. Go back to the question. Fixed cost. Fixed cost is not a relevant cost. Okay, fixed cost is not a relevant cost, except it is incremental or specific, attributable, or direct fixed cost. But in this one, examiner just said fixed cost. So the 18,000 naira should be ignored. However, examiner has told you that the company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. It is fact that selling prices cannot be raised or reduced without adversely affecting income. 5,000 of the fixed cost of vanilla are direct fixed costs. So out of the 18,000 naira fixed cost, we are told that 5,000 naira is a direct fixed cost. Direct fixed cost is a relevant cost. We have to account for that. So I will say direct fixed cost, 5,000 naira. Let's go back there. Okay, which should be saved if production ceased. All other fixed costs will remain the same. It will not change. Therefore, the remaining 13,000 naira is irrelevant. So if that is the case, add up. This is 30,000 naira. 30,000 minus 40 will give us 10,000 naira. So this 10,000 naira is called contribution. This is called contribution. Because this is a positive contribution. Examiner is now asking you, should the company drop the sale of vanilla? So I would then say the company should not drop the sale of vanilla. Okay, my decision now. We need to make a decision. My recommendation, Adigboluja. Is it a limited or, okay, well, I just told Adigboluja. So I would then say Adigboluja should not drop the sale of vanilla because it is contributing positively towards the recovery of the company's general fixed overhead and net profits. So that would be my advice. Because there is a positive contribution, therefore the company should not stop producing vanilla. That's that. What else? Number B, examiner now told you that suppose, however, it is possible to use the resources realized by stopping production of vanilla and switch to producing a new ice cream, banana, which will sell for 50,000 naira and incur variable cost of 30,000 naira and extra direct fixed cost of 6,000 naira. Will your earlier decision in A above remain the same? So what this requirement is saying is that the company may want to switch resources of producing vanilla to now producing ice cream, which is known as banana. So, and we are given those figures. So without wasting time, so in this case, what you are supposed to do is to determine the contribution margin for banana, okay? Determine contribution margin for banana. So if the contribution margin of banana is higher than the contribution margin of vanilla, then you can advise that the company should switch resources. But if not, the company should just continue producing vanilla. So I would then say B, income statement for banana. Okay. Same way as we did for vanilla. However, you have been told that that's a sales value when they switch, if the company switch resources to producing banana, the sales revenue would be 50,000 naira. Okay, sales revenue would be 50,000. You are told that the new ice cream banana, which was sell for 50,000 naira. So I will come here 50. So I will compare this with the relevant costs of producing the banana. We are told that variable cost will be 30,000 naira. What is that information again? An incur variable cost of 30,000 naira and extra direct fixed cost of 6,000. So variable cost is 30,000. Direct fixed cost 6,000 naira. Okay, that's 36,000. 36,000 minus 50,000 will give us 14,000 naira. Positive contribution of 14,000 naira. So examiner is now asking you whether they should, will your earlier decision in A above remain the same? In the A, we have advised that the company should not drop the sale of vanilla. Now that we have been told to switch resources to producing banana, and the banana gave us a higher positive contribution. Therefore, what should be our advice? Okay, what should be our advice? So you should advise that the company should drop the sale of vanilla and switch resources to produce banana. Okay, so I will just say Adigboduja should switch resources. I will say Adigboduja should switch resources of producing vanilla to banana, to producing banana, okay, to earn extra contribution of 4,000 naira, to earn extra contribution or profits of 4,000 naira. That is 14,000 minus 10,000 naira. That's how we got that 4,000 naira. Okay? That's what you need to do. That should be your advice. So that's that. Then the number C part of the question. The number C part of the question, examiner is asking, what are the non-quantifiable factors that the management of Adigboduja should consider? Okay, what are those non-quantifiable factors? So I can say number C. Let me just mention that I don't need to write it down. Let me just mention the qualitative factors. All those things I've discussed earlier, all the 7 or 8 qualitative factors that I gave to you. So you can just pick about 5 of them. Talk about 4 or 5 of, just mention them. So you can say that Adigboduja may need to consider other qualitative factors in addition to the financial analysis as shown above before the final decision is taken. Some of these factors include, number one, you can say, remember what I told you, when you are stating your assumption, you have to link it to the question, okay? You have to link it to the question. So you can say that, one, what will be the effect of dropping the sale of vanilla on the customer? What will be the impact or the effect of dropping the sale of vanilla on the customer? Would there be any possibility of loss of revenue due to low patronage by the customers as a direct consequence of the closure? If you drop the sale of vanilla and switch resources to producing a banana, how would the customer feel? You need to take into consideration the customer taste and preference. Some customers they prefer to eat vanilla instead of banana flavor of the ice cream. So if you are no more producing, how would the customer feel? So you need to consider that, okay? Because it may affect, there may be loss of revenue due to low patronage by the customers as a result of the closure decision. Then number two, after the closure of vanilla, will the affected workers be redeployed to working under banana or be retrenched? So what will be the fate of those workers? That's what I'm trying to communicate here. So after the closure of vanilla, would the affected workers be redeployed to working under banana or be retrenched? So if you want to redeploy them, would the company incur any training costs, any staff training costs? If you want to retrench them, does the company have the financial capacity to compensate the affected workers? All of this you also need to take into consideration. Number three, you may also want to talk about another factor is would there be additional costs to be incurred? Okay, I've already mentioned that also. I think I've mentioned that. Would there be any additional cost to be incurred for training and retraining the affected workers if they are eventually redeployed to working under banana? Okay. So these are some of the factors we need to consider. One more important factor is that to what extent would dropping the sales of vanilla affect workers' morale? Okay. The impacts of dropping the sale, the company will need to consider the impact of dropping the sale of vanilla on workers' morale. This is because other workers currently working on what's the first products? Okay, we have chocolates. We also have strawberry. So other workers working on chocolate and strawberry may be affected. Okay, other workers currently working on chocolate and strawberry may become apprehensive of job loss, and this may affect their productivity. Okay, so they would think if they can ask our colleagues that are currently working under vanilla, they can ask them to go. What will be our fate tomorrow? Tomorrow they can also ask us to go. So that will lower their morale. Once their morale is declined, that will also lower productivity. So this is what we are talking about. These are the things. You can see the way I'm relating it to the question. I did not make it generic. So this is what is expected of you. And this is where we are going to call it a day. Let me know if you have any question for me before we close the class.